Welcome to AU Tax Unpacked. Today, we're lifting the lid on the Medicare levy, that 2% sliver of your taxable income that keeps Australia's universal healthcare ticking over. We'll unpack who pays, who doesn't, and the latest changes straight from the July 2025 ATO update. Our journey covers 6 checkpoints: the levy's purpose, eligibility rules, 2024 to 25 low-income thresholds, special rules for seniors, recent budget tweaks, and planning strategies to stop the levy, or its bigger cousin, the surcharge, from biting any harder than necessary. First, let's unpack Medicare levy. Think of the Medicare levy as a mini membership fee, equal to 2% of your taxable income. Unlike the progressive income tax scales, the levy is a flat rate, kicked in once you cross the low-income threshold. It's entirely separate from the Medicare Levy Surcharge, which only applies to higher earners without private hospital cover. Who pays the levy? If you're an Australian resident for tax purposes and your income sits above the low-income threshold, the levy applies automatically through your tax return. Foreign residents, certain Norfolk Island residents, and people with specified medical or defence-related exemptions escape the levy altogether. What are the low-income reduction thresholds for 2024-25? For singles, the levy disappears at taxable income less than $27,222. And then phases in until $34,027. Families get a break at $45,907 with tapering up to $57,383, boosted by $4,216 per dependent child. The ATO works out the exact reduction when you lodge. No form needed. What are the seniors and pensioners thresholds? Holding a Seniors and Pensioners Tax Offset card. Congratulations! Your low-income thresholds jump to $43,020, single, and $59,886, family. The upper taper limits stretch to $53,775 and $74,857, respectively, meaning many retirees pay little or no levy. Exemptions at a glance. Beyond low income, you might be exempt if you're a foreign resident, served with certain Defence Force invalidity payments, or certify that you're blind for the entire year. Each exemption is recorded at the M1 or M2 labels in your return. Medicare levy versus MLS. Don't confuse the standard levy with the Medicare Levy Surcharge. The MLS hits singles earning above $97,000, or families on above $194,000 who lack private hospital cover. Rates range from 1 to 1.5% on top of the basic 2%. How the levy is calculated. Example: Josie earns $60,000. Her levy is $60,000 times 2% equals $1,200. Contrast that with Mark and Sam, a family of 4 on $48,000. They fall under the $45,907 threshold, plus 2 child increments, so they pay zero levy. The May 2025 budget lifted all low-income thresholds by 4.7%, shielding another million Aussies from the levy or trimming what they pay. Treasury is now exploring CPI indexation to avoid annual catch-up legislation. Use the ATO's Medicare levy calculator to check liability. Consider private hospital cover if you're near the MLS threshold. And if your income swings, say you switch to part-time, complete the M1 labels to claim any reduction or exemption you deserve. Final takeaway. Standard levy is 2%. but low-income thresholds, SAPTO and exemptions can wipe it out. The 2025 budget raised thresholds. Future reviews could tweak the levy further. Know your numbers and lodge accurately to avoid overpaying. Thank you for watching AU Tax Unpacked. Like and subscribe if you found this useful.